Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market, and I just want to do a quick video over the weekend. I've been able to do a lot lately just because my job and whatnot, so just want to do some market analysis. First, I was talking to a friend who he has his own gold channel and whatnot, and we were talking about the market, and it just got me thinking. This top of the stock market reminds me a lot of gold, the top of the gold market in 2011. Now, for full disclosure, he actually thinks Dow's going to break out against gold. He thinks there'll be one more up run to 2,400 to 2,600 somewhere. But then it will be another 5 to 7 year bear market. So a little bit different viewpoint than me. I think the next run up will at least be like 2008 to 2011. Where gold will make 100 to 150% gain. I could be wrong. Me personally, I will start unloading a little bit of my gold exposure. Once gold hits 2,400. Not investment advice, just what I'm doing. Nothing on this channel is investment advice. But anyway, the top of the stock market in December of 2021 was 44,765 or somewhere around there. And what's been happening is now it's 11 to 12% from that high. It's declined. And it's been over a year now. And with gold, the same thing happened. It topped at 1921 in 2011 and all the way up till, I would say, January of 2013. Everyone was convinced that gold, including myself, that gold was in a bull market. It was still in a bull market. This wasn't the beginning of a decline. It was going to tank. And I have to be honest, I think the same thing is probably happening to the stock market. Everyone's acting like it's still in a bull market, and that I personally think we're beginning a 13-year, at minimum 13-year bear market in stocks, maybe a multi-decade bear market in stocks. Now, I think it could go one more upswing to 4,700, form a double top, and it could even break 4,700 to 48, 4,900 and form a double top that way. And then we can begin that multi-decade bear market in stocks. But I think this runs over personally. I think we're going to see a lot of different things. Fundamentally, I think the U.S. is going to lose this war we're in, and it's not a proxy war. It's a real war. I don't want to talk too much about it because I have a channel and whatnot and independent analysis. But once they lose, we're going to eventually go on our way of losing world reserves currency status or a portion of the U.S. And so I think that's going to cause a lot of capital outflows of the United States. And it will be a multi-decade or maybe 1 decade bear market in the United States. So that is my analysis. I could be wrong. When the facts change, I'll change. You never know. But that's what it's looking like. And this reminds me of the top in gold. Everyone's still talking about a bull market in stocks. Everyone's still bullish. But here's the thing. This is what markets do. Markets sucker you in on the downside, and they try to shake you up on the upside. And so they're still acting like stocks are in a bull market. And meanwhile, gold began an upswing from 1100, but you see no one's interested. And I can tell you from my channel and my friends and my friends in the gold newsletter industry, gold, no one's in. Like, the newsletter business is horrible. A lot of people are not getting subscribers, and these are great analysts that I'm talking to that are telling me this. And they're not like others who gold's going to 5,000 or 7,000. They're given reasonable time frames. One of them only thinks gold's going to 2,500, then there's going to be a 7-year bear market. So you can tell he's not sensational and whatnot. The other one thinks gold will go to 4,000 in this upswing. I'm somewhere in between. I think it'll be 32 to 3,500 personally. I could be wrong. But anyway, long story short, I think gold, it's like that. No one's involved. No one's loves it. No one, not even the people in the industry, not even the diehards. And if you look at the stock market, everyone's still bullish. Everyone's in their 401ks. Everyone's still looking for the next upswing. Even when I told an employer I wanted to sell my stocks, of course, I didn't want to sell my stocks, and so I had to leave a job. They said, yeah, it's at the low right now. It's whatever. Of course, I didn't tell them, they're all gold mining stocks, and they've been in a bear market, and I think the gold miners will go, the GDX will at least go to 66 or something. I didn't tell them that. They just assumed it was the general equity market. And so I personally think that this is a repeat of the gold top in a way. Much more enthusiasm in the general equity markets, but everyone thinks that this stock market has more room to run, and it's going to break past that 4,700 once. I don't even know why, because everyone thinks, COVID's winding down and whatnot, but everyone thinks once this uncertainty or the debt ceiling or whatnot. So that's what I think. This top in the stock market reminds me of the top in gold in 2011. It reminds me of that completely. I could be wrong, but no one's convinced it's a top. You can't convince everyone. Same thing with gold. I think Avi Gilbert was the only one calling the gold bull market ended, and I don't know anyone else that did, based on my reasoning. So I think this is the same thing with the stock market. We're at a top, and it's going to start declining, but for the next year or so, I think it's going to sucker people in, especially when the Fed reverses course. So, and the other thing, what might happen is, I think the Fed's not going to stop hiking rates until something breaks, and I mean bad. And then they'll reverse course, and they might have a suckers rally back to the 4,700 top and then start tanking. But I don't see this. The parallels to me are just astronomical. I just see so many parallels. So anyway, that's all I had to say. Hit that like button, subscribe if you already haven't, and comment below. Let me know if you think the gold top in 2011 reminds you of the stock market right now, and that are we entering a similar topic, because it's April of 2023. It's been almost a year, a couple of months more, and the Fed's raising rates, so we know for the rest of this year they're not gonna do it till something breaks. And who knows, maybe something will break, and then when the Fed reverses course, no one will go in the stock market, and they might go into the commodities market. And that's when commodities go up and stocks just go flat or even down at a slower rate. So people might lose all confidence because the Fed raised rates too fast. They don't think it's in control. And the Fed, once behind the curve, thought lowering rates would just juice up the market. So anyway, let me know what you think, and I will see you next video.